ESG reporting is no longer just a voluntary sustainability exercise. Regulations such as CSRD in Europe, IFRS S1 and S2, and frameworks like GRI and TCFD are transforming ESG disclosures into a governance and compliance requirement. Investors, regulators, lenders, and rating agencies increasingly expect companies to disclose ESG information using recognized reporting structures that are consistent, auditable, and comparable across industries and markets. Aligning ESG reporting with frameworks does not mean writing a report first and matching frameworks later. True alignment means selecting a reporting architecture from the beginning. Organizations identify the applicable frameworks, determine required indicators, and build structured data collection processes around those requirements. The result is a disclosure matrix connecting every ESG indicator to a data owner, source system, calculation method, and reporting boundary. This alignment matters because regulatory pressure and capital market expectations are converging. Under CSRD, sustainability disclosures become part of the statutory management report and fall under audit requirements. At the same time, investors and banks increasingly depend on standardized ESG metrics to evaluate risks, classify investments under SFDR, and assess financing conditions linked to sustainability performance. Many organizations struggle because they implement multiple frameworks without structure. They report simultaneously under GRI, TCFD, and ESRS without a unified disclosure matrix, creating inconsistent or duplicated disclosures. Other companies collect ESG data using operational boundaries that do not match reporting requirements, while some publish sustainability reports before formalizing data governance, ownership, and assurance processes. The first implementation step is identifying which reporting frameworks apply to the organization. Mandatory obligations always come first. Companies operating in Europe may need to comply with ESRS under CSRD, while other markets increasingly adopt IFRS sustainability disclosure standards. Voluntary frameworks such as GRI, CDP, and TCFD can then be added strategically to support stakeholder communication without creating unnecessary duplication. The second implementation step is building the disclosure matrix by mapping ESG indicators to internal data sources. Companies identify where the data lives, who owns it, whether it matches the required reporting boundary, and whether it can be externally assured. This process often reveals critical gaps, especially for Scope 3 emissions, supplier data, and social indicators that require collaboration across procurement, HR, operations, and finance teams. The third implementation step is integrating ESG reporting into governance routines and operational processes. ESG data collection must follow the same level of internal control as financial reporting. Companies establish validation rules, cutoff dates, audit trails, approval workflows, and formal RACI matrices defining responsibilities for data collection, review, and disclosure sign-off. Consider the example of a mid-size European manufacturer preparing for CSRD compliance. The company begins with a gap assessment against ESRS standards, identifying missing disclosures related to climate, workforce, and governance. It then maps indicators to internal systems, identifies missing Scope 3 supplier emissions data, and develops a supplier engagement and remediation plan before producing its first ESRS-aligned sustainability statement subject to external assurance. Mature ESG reporting functions are defined not by the number of frameworks they use, but by the quality of their governance and data infrastructure. They maintain disclosure dictionaries defining every ESG indicator, align ESG controls with financial reporting standards, explain restatements transparently, and produce disclosures capable of achieving limited or even reasonable assurance. This level of maturity enables credible, comparable, and trusted sustainability reporting over the long term.